You are watching The Money Show on ET Now. I am Anurag Shah. Today we bring you a special NPS Masterclass, a comprehensive guide to the National Pension Scheme with recent major reforms like 100% equity option, multiple scheme framework, NPS Vatsalya, NPS Swasthya, and UPI-based onboarding. NPS has evolved significantly and is becoming a key pillar of long-term retirement planning. To help you understand everything about NPS, from investing and returns to withdrawals, taxation, and the latest reform, we are joined by very special guest today in our ET Now studio, Sumit Shukla, MD and CEO, Axis Pension Fund. Thank you so much, Sumit sir, for joining our The Money Show NPS special.
Thank you, Anurag. Thank you for calling us.
So, sir, next 25 minutes is going to be very engaging, and I have lots of questions on NPS because in last 1 year, a lot of changes we have witnessed in NPS scheme, from MSF to NPS Swasthya to 100% equity. So, do you agree that last 1 year there were a lot of changes that did not happen in last 15-20 years?
Agree, sir. Last 1 year has been quite an interesting time for pension industry. Our new chairman took over about a year back, and after that, so many changes have happened. And all of them are very good changes, very positive for the consumer. And it is going to benefit the consumer in the long term as they prepare for the retirement. As you have rightly said, it is NPS Swasthya, MSF, 100% equity, onboarding. Multiple changes have happened, and all of them are giving results as the numbers show. And in the time to come, it will only increase.
Okay, but still, sir, there are very few takers for NPS. So, as per your experience, what are two reasons that still younger generation is not much attracted toward NPS?
So I think there were two reasons for which, as you rightly said, why people were not interested. One was there was a lock-in. You couldn't withdraw money till the time of retirement, which was a very big negative from people because they thought 60 years is long away. That is the reason in the MSF framework we have come up with 15 years. So if you start working at 28, 30, you can actually withdraw the money at 45. For younger people, retiring early is a very good thing. That's what they think about. So this is one reform which has helped. Now after 15 years they can withdraw the money. The second change, which was a big problem for younger people to come on to investment, was 100% equity, because they were hearing about markets, 100% equity, people making good returns. MSF has brought that 100% equity also.
So help us understand this MSF scheme. Two key points about this MSF scheme.
So, sir, MSF first gives you 100% equity exposure. It is for the first time in retirement planning, 100% equity has come in. As you know, retirement is a long-term fund, and 100% equity is a given, because in the long term, equity is the best investment place to be. That is the reason 100% equity has been brought into MSF, which really it was a defining moment for us. Second is we have also now got into other asset classes like gold, silver, and that is what people wanted they were asking for it, that why are we not there in gold, silver, and other investments, which has also come through MSF. So that is a big thing which has happened. So all in all, MSF a big reform and very attractive for people to come now.
And sir, how withdrawal has changed? You just said that previously you have to wait for 60 years. So now, after how many years, if I have started my NPS account, I can withdraw?
So after 15 years, you can withdraw your NPS money, 60% completely tax-free. 20% also you can take lump sum, and only 20% annuity. That is also another big reform. Earlier, 40% used to go into annuity, which has now got changed into 20% annuity. So that has also become a big benefit, which was quite a drag for people who are younger. So that has also come now changed. But 60% comes tax-free, 20% is taxable, and rest 20% goes into annuity after 15 years.
So, sir, means maximum your money is locked in for 15 years only in NPS. If I'm starting at the age of 30 years, then at the age of 45, I can withdraw my 60% corpus, 20% more I can withdraw, which will be taxable, and 20% will go into annuity.
Absolutely right. And also, if you don't want to withdraw, you can continue till age of 85 now. and it is not required that you should withdraw because it's a retirement money. So if you don't want to keep it, withdraw it, you can keep it up to 85 and enjoy tax benefit at that up to 85.
Okay, sir. Now one question I keep when I am arguing with my friends, relatives, they used to tell me that we are not attracted toward NPS because mutual fund is better option than NPS. So 3-4 points you will tell us that will make NPS much favorable than mutual fund.
So, sir, mutual fund by nature were always for short term. They were never for long term. It was always conceived to be a short term investment, and that is the reason the fund managers have an horizon of maximum of 5 years, 3 to 5 years. Our fund managers our teams are quite aligned to doing long term investments. So that is the reason if you lock in your money with a pension fund, you will get to see much higher returns coming in the long term. Worldwide also, the pension funds are much larger than the mutual fund industry, and that is where, largely because long term returns are very good. Second, also important thing people have to note is the charges that you are going to pay. For a mutual fund, the charges which are applicable today through the TER are quite high. NPS with its 12 basis point continues to be the cheapest product from an investment perspective. So charges in the long term, in 20 years, 30 years, dent your corpus in a big way, where NPS scores big time than mutual fund. And that is where I think people have to now start looking at where you have put your money, how many charges are getting deducted from it, and what is going to happen. So that is the reason NPS scores over mutual fund or any other investment is because of charges, sir.
Okay, sir, with a 100% equity scheme and its someone's horizon is more than 15 years, you will say confidently that any day NPS is better than mutual fund?
Absolutely, sir. Because as I said, our fund managers know when the people are going to retire, how much money is going to be for what term, and they take calls and put money into investments which are going to pay off in the long term. And that is what differentiates us from everybody. Also important, sir, lock-in helps people to keep the money invested. And sometimes people think lock-in is negative, which is quite wrong. Because some money you have to keep aside for your retirement. And that is where I think NPS scores that it doesn't allow you to touch the money before 15 years. And after 15 years, when you will look at your corpus, you will see a much sizable corpus that has got generated than you would have otherwise taken in the short term through your mutual fund. Because mutual fund, any need which comes at any point of time, the first place the person goes to is withdraw from the mutual fund, which in NPS you can't withdraw, and that is the benefit that accrues for an NPS subscriber.
Well, okay, sir. Sir, now there are, recently there were few other changes also. One was related to the NPS Swasta. So help us understand how NPS Swasthya scheme is working, and this Swasthya scheme can be substitute of health insurance?
So Swasthya is a combination of retirement plus health. Today, health is a big problem for most of the subscribers. When they retire, they don't have a requisite health cover. So what now the regulator has done is it has made an amalgamation of a retirement NPS plus a health plan, which will give people security from health needs. And we all know one health problem at an old age can wipe off your entire savings, and that is a big problem that people face, and that is the risk that people live with. What Swasthya does is it gives you what is called as a super top-up plan, which comes with the Swasthya scheme. It is mandatory. So when you are saving in the Swasthya scheme, like we have recently done a pilot and which has been very successful, we have allowed people to save in the Swasthya scheme, and we have sold them a top-up plan. We had various options, but the one option that I would like to share with you was 3 lakh deductible and 30 lakhs cover. So first 3 lakhs is what you have to contribute from your own pocket, and you get a health cover of 30 lakhs. And we have the way we have sold to people is you save in the Swasthya scheme up to 3 lakhs, and you will be covered up to 30 lakhs. And even in that 3 lakhs, if you want to withdraw anytime, unlimited withdrawals are allowed. And we have tied up with MediAssist, and that MediAssist is covering about 18,000 hospitals, pan-India. So if you are in an hospital and you want to take out your money, you have to just give your PRAN number in that hospital of your Swasthya account, and your money will get directly paid to the hospital. So it's a great combination for health and retirement
so
both.
Your own money will be paid to the hospital.
Yes.
But unlike in insurance company, you pay premium, and when there is a there is an emergency or treatment, insurance company pays the claim. But in under the NPS Swasta, your own money which you have saved over the years, the overall corpus, from that corpus only money will be paid.
Absolutely. So there was a big need because a lot of younger people who are at 25, 30 used to pay health insurance premium, and they are generally fit. You know, fitness is something which is in these days. So people don't really use the health cover till the time they are 40, 45, and large amount of premium goes. So this health Swast scheme gives you that benefit. You save it for your own health into your Swast scheme, and you cover, you create a corpus for your health need. And if there is a big health requirement which is going to come, then we have the top-up plan which is available for you. And that is the benefit that Swast does. Plus, it will announce.
You will never feel like saying that, okay, I paid so much of premium and never utilized it.
Absolutely.
If
Absolutely.
you're saving
Yes.
on your money, and if there is a requirement from your own corpus, the money will be paid to the hospital.
Yes, yes, sir. And this is actually internationally called a health saving plan, which has now come to India with the Swast variation. It is going to benefit a lot of people. Even the health industry is going to see a lot of growth. Now we are going to come up with more innovation on that health plan that we are going to offer. But that's a big innovation that we have done, sir, recently.
Okay. Sir, recently there were few new changes in NPS Vatsalya also. So help us understand how, with the new changes, NPS Vatsalya scheme is more attractive for children.
So, sir, first I will give you a brief about NPS Vatsalya. This is the only scheme which is for children in India. We have a Sukanya Samriddhi scheme, which is only for the girl child. This is the one which didn't differentiate between a girl or a boy. A child born today can actually open an NPS account through the Vatsalya. We only need the birth proof. There is no KYC required. If you want to do any other investment for a child, whether it is insurance or mutual fund, you need entire KYC documents. With the Vatsalya plan, you only need the birth proof. We have a completely digital journey. You open the account for the child and start saving for the child. We have recently called it a special purpose vehicle product, and we are allowing up to 100% equity into it.
NPS Vatsalya
in NPS Vatsalya also. So people can save up to 100% into equity. It is a great product from a perspective that even if you make a small contribution for a child who is born today, maybe 1,000 rupee SIP, the corpus that he is going to have when he turns 18 is going to be huge. And that is what we are providing people, an early vehicle for younger people to know. And once you also share with your child that you have been saving for him, the saving habit will also get inculcated. Okay, my parents have saved for me and I'm getting a corpus, a sizable corpus at the age of 18. He may continue to be in the NPS scheme.
So at the age of 18, sir, you can withdraw from NPS Vatsalya?
You can withdraw from NPS Vatsalya at that point of time, or you can convert it into an adult account, which is a normal NPS account, and you can continue to save.
How much you can withdraw from NPS?
As sir, the withdrawal is 60% tax-free. You can get at the age of 18. You are allowed up to 80%, but you can take 60% as tax-free. But what we are recommending for people is to continue saving, because the kids will.
No, but there is a requirement for higher education, for wedding.
Yes, sir.
If somebody has opened up a NPS Vatsalya account just after the birth, and every month they are investing or depositing around 1,000 rupees per month, and at the age of 18, 60% can be withdrawn, which will be tax-free.
Correct.
And up to 80%.
They can totally withdraw. Like in any other exit of NPS, the same is applying here also. Up to 80% lump sum can be withdrawn. 20% will be have to kept into annuity, which can be delayed whenever the child is old. He can take out that annuity and can take the money, sir.
Okay, sir. Now, sir, time for a short break. We'll continue our conversation. I have few more questions on NPS, National Pension Scheme. So just we'll slip into a short break. We'll be right back. Don't go anywhere after the break. Welcome back after the break. You are watching The Money Show, your daily guide to the world of personal finance. Today we are having a masterclass on NPS, National Pension Scheme, and I'm joined by Sumit Shukla, MD and CEO of Axis Pension Fund. Sir, we were just talking about the NPS Vatsalya. So help us understand from the taxation point of view. If someone is starting in NPS Vatsalya just after the child's birth, and somebody is also going for the mutual fund, same amount, same tenure, same percentage of return, from the taxation point of view, how both will be different? Because in mutual fund, it will be a long-term capital gain at the time of redemption. But in NPS, how it would be different?
So, sir, if you're going to save for 18 years, I can assure you the corpus is going to be large. So, the long-term capital gain that accrue from mutual fund will take away shave off a lot amount of money from your corpus when your child will get it at the time of 18. What NPS brings is completely tax-free withdrawal up to 60%, and that benefit you will get irrespective of whatever amount is there, whatever the corpus is going to be there. And mutual fund. One, charges, because of 18 years, the charges that you're going to pay for the child's investment is going to be huge. Second is going to be the taxation. If I add both of them, the corpus difference is going to be substantially large. And what I would recommend is we have great tools of calculation on NPS Trust website, which is available for the customers to go and check, and different pension funds. You can check the difference and how much is the corpus difference is going to come, provided you invest in NPS against a mutual fund.
Okay. And so there's a recent update about NPS Pride Disha Analytics platform. So what is this new platform?
So basically, we have now got into 2-3 important things, which is Pride Disha is also one of them. One is we have also done, first on the grievances, we have created a platform where people can come and put all their grievances at one place. It's a new thing that we have done. Plus, we have also are now integrating so we have 3 CRAs who manage the entire backend of NPS. If you open your NPS account, it is going to be with one of the 3 CRAs. We are also getting all the 3 together on one place, so that people can do all the servicing at one platform, which will be like an NPS Central, which is going to be there. So Disha platform is also, we are providing more analytics and more input that the customer may need from what investment is happening, how his scheme is behaving. That all data is going to be there at one place.
Sir, we have 4 more minutes to go. Can I have a rapid fire segment
Yes,
with
sir.
you?
Yes, sir.
Shall I start?
Yes, sir.
You have to answer spontaneously
Absolutely.
and in one word.
Yes, sir.
Okay, sir. So why isn't NPS more popular despite its tax benefit and low cost?
Because it is, people don't take out time to open an NPS account. That is the reason.
Should I invest in NPS or mutual fund for retirement?
NPS only.
Is NPS worth investing in if my employer doesn't contribute?
Yes, it is worth investing in any case.
How much should I invest in NPS every month?
Minimum is 5,000 rupees you should take out from your savings to keep aside for your retirement.
Is the lock-in till age of 60 the biggest drawback of NPS?
As I shared, it is taken away. Now 15 years is the lock-in.
Can I trust the government not to change NPS rule in future?
You can trust the government that it will only become better as we go along.
How much pension I can actually expect after the retirement?
It depends on how much you want to save now. Any rupee saved is going to give you substantial pension when you retire.
Should I choose active choice or auto choice? Which is better?
Auto choice is better if you don't want to take out time, but if you have the time to analyze, then go for active.
Should young investor opt for 100% equity in NPS?
Yes, 100% equity is recommended for anybody who is less than 18.
How do I select the best pension fund manager?
Best pension fund manager is the one which has got the right brand, right team, and has a long-term vision. You can always look at returns for the long term, but go with the big brands and you will be more than happy.
How easy or difficult is to withdraw money from NPS after retirement?
It is very easy, completely digital. You have to come to your own CRA. On 2-3 clicks, you can withdraw your entire money.
What happens to my NPS account if I change my job or move abroad?
It is completely transferable. If you move abroad, you can take out the money, you can do whatever is required at that point of time, it depends. But if you change your job, move cities, move companies, it is completely digital, completely transferable.
Is Tier 2 account worth opening or should I stick to Tier 1?
You should open both Tier 1 and Tier 2. Tier 2 gives you liquidity. You can withdraw money at any point of time from that. And the charges are the lowest in any financial product.
Can I withdraw money before retirement if I need it urgently?
15 years is the lock-in. If you want to withdraw before 15, it is 80-20. 80% is annuity, 20% is lump sum.
Sir, how is NPS taxed at the maturity and during withdrawals?
So it is 60% tax-free completely. 20% if you want to withdraw is taxable. And balance 20% goes to annuity. Completely it goes to annuity. And whatever returns you get from the annuity are taxable.
Can NPS help me save more tax under the new tax regime?
Yes, it is the only saving which is available in the new tax regime. Please go to your employer. 14% of your salary, of your basic salary can be tax-free.
Can I change my pension fund manager investment allocation later?
Yes, you can change. Every year you can change. It is very easy. Again, as I said, it's completely digital.
Does NPS deliver better long-term returns than EPF or PPF?
It already, if you look at the last 10 years, some of our pension fund managers have done 10 years. Our returns are far superior than EPF.
And sir, who should avoid investing in NPS?
No one should avoid investing in NPS. Worldwide, pension products are mandatory. In America, in UK, everywhere it is mandatory. In India, we also recommend to the government to make it mandatory that everybody should have an NPS account.
So my final question of this rapid fire segment, with recent reforms like 80% withdrawal, UPI onboarding and 100% equity option, has NPS become much better or best retirement product today?
Yes, sir, it is the best product, and I just want to elaborate on the UPI onboarding. We are coming out with a journey with all UPI platforms. It is already live with the Beam. In 5 seconds to 10 seconds, you will be able to open your NPS account. We will be going to other UPI platforms also, but it's the best product today, easily to be onboarded and taken.
Okay, so sir, my final question to you, what is the latest development on RAIS scheme? What is this new scheme? Can you help us understand?
So again, it is a big reform which the regulator has come out with. Till now, we were only a part of accumulation scheme. We were only collecting money and growing your corpus. For the first time, we have come out with a retirement income scheme, which is the RAIS scheme, which post-retirement against annuity, you already also have an option of taking out money in a very systematic manner and making sure your corpus is also growing and you are getting pension. It's a great scheme which we are slowly seeing traction coming in, but it will be a big competitor to the annuity scheme which is offered by life insurance company.
Okay, sir. Thank you so much for this masterclass on NPS. We have taken a maximum number of questions, and I hope that our viewers also enjoyed this show, this conversation on NPS National Pension Scheme, where we spoke about the recent changes in National Pension Scheme, 100% equity option, NPS Vatsalya, NPS Swasthya scheme. So on this note, it's a wrap on this edition of Money Show NPS Special. But don't go anywhere after the break. More on the other side. Stay tuned to ET Now.